Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you can find across the markets today. Gap trading is when stocks are gapping higher or lower at the open from yesterday's close. It creates an opportunity for traders that can identify a specific price where A, stocks will be drawn to, and B, have a price reaction from in the other direction. What I do is two things. I teach a course at LazyGapTrader.com where I teach traders how to specifically calculate and identify those price levels where stocks should have a price reaction in the other direction. I teach traders the formula that works over and over and over again. The other thing I do is give traders an opportunity to get my gap trades each and every morning. They come by email at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the market even opens for trading. Before we dig into the charts further, let's take a look at the email that went out to subscribers this morning at 9 o'clock before the market even opened for trading. Here it is, and as you can see, the email arrived at 9:04, and today's gap trades contained 6 potential opportunities on the board. Now, one of the things I teach in my course is we're only interested in trading the stocks that come into their specific price levels. Unless that happens, we're not interested in the trade. It's a no trade. It's off the board. This morning, so far, 2 of the stocks came into their levels, and these are the ones we're going to go over in detail when we get back to the charts. The first trade was Tiffany & Company, TIF. I say gap lower. Support levels are $84.50, and I give a secondary level at $81.90. Stop and profit target is about 35 to 65 cents. This is a minimum profit target. We'll talk more about that when I get over to the chart. The second stock that came into its level today was Alnylam, ALNY, gap lower. Support levels are $70.27 and $67.50. Very important. You pay attention to those two numbers. Stop and profit target is about 35 to 65 cents. Again, a minimum profit target. Let's head back over to the charts and unpack exactly what happened with these trades today. Here we are on a chart of Tiffany, and I took it down to a 1-minute chart because I wanted you to see the magnitude of how fast this can work. It doesn't happen like this each and every time, but when it does, it's quick and it produces quick profits. The stock closed yesterday up at $93.02. The stock was opening this morning at $85.61 and went lower. As you can see, the stock pierced through the level by just a little bit, staying within our stop loss limitation. However, just minutes later, the stock was at a high of $86.87, producing over a $2 gain in just minutes off the level identified at 9 o'clock a.m. Eastern Standard Time. Anybody that's taken my course is able to identify this exact and precise price level. Here, just looking at the 60-minute chart, you can see the stock went all the way up to a high of $88.32 for almost a $4 gain off the level identified before the opening bell. The reason why that's important is because I have an entire video module in the course that explains how when we are in a trade, I teach traders how to turn trades into risk-free, emotionless trades once we are in a profit situation. If for nothing else, you can see the power of these levels that I teach you how to calculate in my course at LazyGapTrader.com. Now, ALNY was a little bit different. There were 2 levels, $70.27 and $67.50. You can see what happened. The stock closed yesterday at $74.82. The stock opened at $71.44 and continued lower. It cut through the first level like a hot knife through butter, and I was stopped out of this trade. But here's an example why each trade is handled independently of each other. Every trade stands on its own. Each of these price levels has the opportunity to produce a profitable trade. Obviously, in trading, we know not all trades work out 100% of the time. That's just a function of the business. However, these trades work out a majority of the time. But even when we have a loser, I'm going to show you how we can turn it into a winner. The first level didn't work at $70.27, but look what happened when the stock came into the $67.50 level. It pierced through by a little bit, making a low of $67.34 and ripped higher. Look where it is right now. The stock is at a high right now of $70.80, over $3 from the lower level. This is a perfect example of why each trade has to stand on its own. As traders, we can't be afraid to get into the same stock we might have just taken a loss on, because the second level has the same opportunity to work as any other level that we calculate. I can teach you how to trade the gap successfully in my course at lazygaptrader.com. I teach you everything you need to know: which stocks this works the best with, what are the criteria of the stocks we're looking for, how to find the stocks, how to trade the stocks, how to calculate the levels. Everything you need to know is found in the course at lazygaptrader.com. If you want to learn how to build yourself a strategy that you can use each and every day for the rest of your trading career, then come over to check out the course. I'm David Frost. Thanks for tuning in.